Farfetch is one of the fastest growing luxury e-commerce platforms in the world with a $20 billion market cap. It's listed on the New York Stock Exchange under the ticker FTCH, and its stock is up 472% year to date compared to the S&P 500 of about 13%. This is primarily due to Farfetch's high revenue growth of 71% year over year and the stock's price multiple expansion. Despite the 472% increase in its stock price in 2020, the stock is up 108% from its 2018 IPO. Let's take a look at what Farfetch does. It has 6 main businesses, which include 1. The Farfetch Marketplace, a global luxury marketplace that connects customers in 190 countries with over 1,300 brands, boutiques, and department stores. On average, customers spend $574 per order on the platform. 2. Farfetch Platform Solutions, which builds and operates e-commerce solutions for luxury brands and retailers. 3. Farfetch Store of the Future, its retail innovation arm which develops and implements technology solutions for retailers. 4. Browns, a British fashion and luxury goods retailer. 5. Stadium Goods, a premium sneaker and streetwear reselling marketplace which has an average customer order value of $340. And 6. New Guards Group, a luxury fashion production and distribution company that Farfetch acquired in August 2019 for $675 million, with renowned brands including Off-White, Palm Angels, and more. Farfetch organizes its businesses in 3 main segments: digital platform, brand platform, and in-store. The digital platform segment includes the Farfetch Marketplace, Farfetch Platform Solutions, and other online websites. It generates revenues primarily from transaction commissions between buyers and sellers, and also includes direct-to-consumer sales through the Farfetch Marketplace. The brand platform segment includes New Guards Group and franchise store operations. And lastly, the in-store segment includes group-operated stores including Browns, Stadium Goods, and stores in the New Guards portfolio. Revenues are from the sales made in these physical stores. Moving on to Farfetch's financials, its total gross merchandise value, or GMV, increased from $492 million to $797.8 million, increasing 62.2% year over year. GMV refers to the value of goods sold through Farfetch's platform. Meanwhile, its digital platform GMV increased 60.4% year over year, driven by growth in active consumers to 2.7 million, which increased 45% year over year. Third-party transactions generated the majority of Farfetch's digital platform GMV at 83%, with a take rate of 30.4%. Third-party take rate is calculated by taking third-party digital platform services revenue as a percentage of third-party digital platform GMV. In terms of revenues, Farfetch's digital platform segment made up 71.7% of total revenues. Its brand platform segment made up 25.7%, and its in-store segment made up 2.6%. Total revenue increased from $255.5 million to $437.7 million, growing 71.3% year over year. The increase was driven by the 68.1% growth in digital platform services revenue to $263 million. In-store revenue also increased by 25.8% to $11.4 million, primarily driven by the acquisition of New Guards retail stores, as well as the opening of new stores throughout the year. Gross profit increased 81.6% year over year to $209 million, primarily due to growth in digital platform services revenue and the gross profit from the addition of New Guards starting from August 2019. Gross profit margin increased from 45.1% to 47.8% year over year, primarily driven by a higher digital platform gross profit margin, which increased from 53.2% to 54.5% year over year. This growth was driven by increases in both third-party and first-party gross profit margins, partially due to fewer Farfetch-funded consumer promotions during the period. The increase in first-party gross profit margin also reflects an increased mix of full-price sales and higher-margin first-party revenues from sales of New Guards brands-owned products sold direct to consumers through its platform. Despite positive gross profits, Farfetch has negative adjusted EBITDA, or earnings before interest, tax, depreciation, and amortization, of $10 million and negative adjusted EBITDA margins of 2.7%. However, Farfetch is targeting adjusted EBITDA profitability for the 2021 fiscal year. In terms of liquidity, cash and cash equivalents were $756 million, increasing by $434 million from December 31st, 2019, more than double of what it had previously. The increase in cash and cash equivalents is primarily from the private placement of convertible senior notes in the first half of 2020, partially offset by a net cash outflow from operating activities. Finally, we'll discuss major opportunities and tailwinds for Farfetch's future growth. To start, the global market for personal luxury goods is expected to have a compounded annual growth rate, or CAGR, of 3% through 2025, growing into a $352 billion market. Currently, the online luxury market as a percentage of the overall industry is only about 12%. However, the online luxury industry is expected to grow into 30% share of the overall industry at a 20% CAGR. Millennials and Gen Z are also projected to contribute a greater share in the global personal luxury goods sales, growing at a 10% CAGR. From 2017 to 2019, Farfetch's digital platform GMV grew at a 48% CAGR, twice as fast as the online luxury market, which had a 21% CAGR. This demonstrates Farfetch's ability to leverage the opportunities presented from the growing online luxury market. Within the global luxury industry, China's luxury market presents a massive opportunity for Farfetch. Consumers in China represented 35% of luxury consumption in 2019 and is expected to grow to 49% in 2025 at a 9% CAGR, with the China luxury market reaching $170 billion. Farfetch already has a successful business in China today, offering localized experiences with a mobile-first approach. Moreover, Farfetch's average order value is $720 in China, about 30% higher than its global average. It also operates through multiple media and social commerce channels, including WeChat and its mini programs, Baidu, TikTok, and more. JD.com and Tencent are also investors in Farfetch, who own a 12% and 1% stake respectively. That being said, Farfetch recently announced one of its most important partnerships in regards to the digitization of the luxury industry and China moving forward. On November 5th, 2020, Farfetch, Alibaba, and Richemont announced a global strategic partnership to provide luxury brands with enhanced access to the China market, as well as to accelerate the digitization of the global luxury industry. Farfetch will launch luxury shopping channels on Alibaba's platforms, Tmall Luxury Pavilion, and Luxury Soho, China's premier luxury and luxury outlet destination within the Tmall Marketplace, as well as Alibaba's cross-border marketplace Tmall Global. The new channels expand the reach of Farfetch's global luxury platform to Alibaba's 757 million customers, offering luxury brands a multi-brand solution through a single integration with Farfetch. This will provide luxury labels with a unique opportunity to elevate their brand awareness, while also significantly expanding their addressable market of luxury customers through their participation on Farfetch's global marketplace. As a part of the partnership, Alibaba and Richemont, a leading global luxury company, will each invest $300 million in private convertible notes issued by Farfetch. Both Alibaba and Richemont will also invest $250 million in Farfetch China, taking a combined 25% stake in a new joint venture that will include Farfetch's marketplace operations in the China region. In addition, Alibaba and Richemont have an option to purchase a further combined 24% of Farfetch China after the third year of the joint venture's formation. The investments by Alibaba and Richemont in Farfetch China and the establishment of the joint venture are expected to be completed during the first half of 2021. In addition, Artemis, the investment arm of Kering, a global luxury company with brands such as Gucci and Balenciaga, has also agreed to increase its existing investment in Farfetch with a $50 million purchase of Farfetch's Class A ordinary shares. This partnership revolves around the concept of Luxury New Retail. Luxury New Retail, or LNR, is an initiative which will leverage Farfetch's and Alibaba's retail technologies to serve the needs of luxury businesses, including a full suite of enterprise solutions powered by Farfetch. These solutions will serve distribution strategies for luxury brands, including fully connected e-commerce websites and apps, omni-channel retail technology, and access to the Farfetch and Tmall Luxury Pavilion marketplaces via a single integration. Farfetch and Alibaba have also formed a steering group to further enhance the LNR initiative aimed at leading the digitization of the global luxury retail industry. The chairman of both Richemont and Artemis will join Farfetch and Alibaba on the LNR steering group as founding members, bringing their combined decades of industry leadership and expertise. The new initiatives with Alibaba Group and Richemont extend Farfetch's strategy to power the digital transformation occurring across the luxury industry, which has been accelerated by the unprecedented challenges in 2020. With Alibaba, JD.com, Tencent, Richemont, and Kering as investors, Farfetch has positioned itself as the global platform for luxury. However, we'll have to see what happens to Farfetch and its stock moving forward. Subscribe and turn on post notifications to stay updated for new videos, leave a like, and comment down below what companies or stocks you would like to see next.